Hello everyone, and welcome to our Market Alert video for today, which is February 28, 2025. And I was going to talk with you about the inflation numbers we got this morning, but I just got done watching that press conference in the Oval Office with Zelensky and Trump. Oh my gosh, that was intense. So that kind of like, that it was crazy, man. It almost looked like they were going to start coming to blows. So what does that mean for us in terms of, the economy, our economy, the stock market, our bonds, our investments? Well, I want to get into that. But before I do, let me tell you, I am Ken Moraif. I'm the founder and CEO of Retirement Planners of America. And we work primarily with people who are over 50, who are retired or retiring soon. So everything we talk about in these Market Alert videos applies to you if you are in that demographic. So if that's you, I hope this video finds you healthy, wealthy, and wise. What is the effect of this? If the deal falls through or if it goes through, probably not much. In the short run, there might be a reaction to it. If the deal was signed, the market could go up. As it looks now, it may not get signed today. And if that's the case, then, the market may react negatively to it in the short run. But overall, if we look at how does that affect our economy, not much. So basically, what we're looking at then is the inflation numbers that we got this morning. And if you look at what happened is the PCE deflator, which is the Fed's favorite gauge of inflation, it came in relatively benign. It wasn't good. It wasn't bad. It's kind of in line with what people thought it would be. And so because of that, we are going to change our fearless forecast. We said that the Fed would lower interest rates in May, in their meeting in May. But now it looks like that's going to get moved out about a month because inflation is still holding, even though it's relatively benign. So because of that, we think that that's when we'll start seeing some gains in the market. Last week, we also talked about the potential for a correction being very real. And a correction, of course, is a drop in the market of more than 10%, but less than 20%. So if it's in that range. And right now, since we said that, the market's gone down approximately 4%. So we're almost halfway to a correction. And it wouldn't surprise us if we didn't go the rest of the way. However, as I've just noted, we consider that to be potentially a buying opportunity, not a reason to freak out and sell everything and go hide. So we continue to think that the second half of the year should be relatively strong. We might have a correction, get past that 10% threshold. And if we do, certainly we would consider that to be, as I said, a buying opportunity. So overall, things look good, despite everything and all the fireworks that we just saw in the Oval Office. One thing that is very important, because we work primarily with people who are over 50, who are retired or retiring soon. And so because of that, if you are within 5 years of your retirement, or you're in the first 5 years of your retirement, if you're in that decade, we consider that to be the single most important decade of your entire financial life. And what I mean by that is that if you take large losses during that time, then your ability to retire may be impaired, or your ability to stay retired may be impaired, or if you can't go back to work, your ability to support the lifestyle that you want could be impaired. Now, we don't want any of that for you. So that's why we have a strategy we call invest and protect. And this is the same strategy that told us to sell in November of 2007 before the market crashed in 2008. And it told us to sell literally the day before the pandemic happened. Of course, they shut down the economy after that, and we saw how far down the market went. And then, in our view, it'll help to protect against the next big bad bear market. We believe growth is important, but protection of principal is even more important. So even though we have a very positive outlook for the rest of this year, we do think a correction will come, but we'll get past it. And we think the year will be a good one. We still don't know the future with great clarity. And therefore, we always plan for the worst and hope for the best. So if you're over 50, retired or retiring soon, we think that's a philosophy that you should adopt. Now, if you're wondering about my casual attire and my unshavenness, I just had my knee replaced, my left knee. I had my right knee replaced back in November, so I'm on the second one. So I'm actually operating from home. I've been shaved because if I nick myself, I could get an infection and it could get into the knee, so I'm not shaving. So I'm going through the throes of recovery from knee replacement surgery. But hopefully by June, I'll be back on the tennis courts and happily enjoying my two new knees. So please like and subscribe this video. If you enjoy it, it would be very helpful. We'd be very thankful. And also make sure you check out our podcast. If you go to our website, it's RPOA.com. And when you're there, you can subscribe to our podcast. We had close to 300,000 downloads over the last 12 months. So maybe there's something there for you. Again, it's designed for those of you who are over 50, who are retired or retiring soon. So thank you for watching this video. I hope it found you healthy, wealthy, and wise. And we'll talk soon.
Retirement Planners of America, RPOA.com.